Now today I'm going to share with you a company that I'm pretty familiar with simply because I've seen their operations firsthand. This company is none other than IFAST Financial. Now, why am I suggesting IFAST Financial do well past this current crisis? Simply because I've seen how they've done things. I've seen how they can actually leverage and actually build their business even with this crisis going on. In this video, I'll be covering a few key points. The first, I'll give you a quick overview. IFAST Financial is about 20 years old, and I'll give you a quick history run through what it has done since its inception to its listing, what kind of products, what kind of services have they incorporated along the way, and why they have actually shown growth along this journey. The second part which I'll cover with you is actually why they have a scalable business model. Now, you know, fintech companies pride themselves as having scalable business model, which means they can go to another country, increase volume without too much of expenditure. I'll cover with you key details on it. The third part I'll actually cover with you is recurring income. IFAST Financial has a very beautiful recurring income stream, and if you like REITs, if you like dividend income, recurring income is something that you might want to focus on, and that is the third part. And in the last part, I'll cover with you what I imagine IFAST Financial can potentially become. Of course, there's still a long way to go, but I actually cover with you some of its competitors. I'll give you like kind of a roadmap, what I understand in terms of interpreting their business model. Now, if this topic interests you, continue watching on. Hi guys, welcome back. Now, before I start, a quick disclaimer, this is not a buy and sell recommendation, and in any case, be comfortable with company-specific risks before you invest in a particular share, IFAST included. Now, let's run through what IFAST Financial has actually achieved along this 20 years. It actually started in 2000, and its first product was Fund Supermart, FSM. Now, Fund Supermart right now is used by many DIY investors, and in 2002, they've actually launched IFAST for advisors like myself to partner, because in my position, I actually believe in hand-holding new investors to help them get invested, as well as investors who are not comfortable managing portfolios. So there's actually two key components: the DIY platform, Fund Supermart, as well as the IFAST one, whereby they partner with independent financial advisors like myself. Now then we move forward along the years. What we see is in 2007 and 2008, IFAST actually moved to regional businesses. They've actually moved to Malaysia, they've actually moved to Hong Kong, which means in terms of scalability, it's not too difficult. In future, they can move to Vietnam, they can also move to Thailand, I don't know. There's a lot of room to grow. And that is why when it comes to a fintech platform, the resources are roughly the same, but you can actually compete in different market with very little changes. You just need to clear regulatory license and stuff, and you can actually scale your business in many ways. So Hong Kong and Malaysia are right now the second and third in terms of contributing to its profits. Later I'll show you details also. And back in 2014, if we move forward a couple of years more, you realize that IFAST actually tries to break through into China market. Now this is an important story because Chinese market is hyper competitive. I'm not too sure why IFAST wants to move into China, but nonetheless, China, when it comes to operations, has been bleeding money for IFAST for a couple of years. In fact, since 2014. In my case, if you look in terms of financial reports, IFAST actually reports their statements excluding China, including China, which means the China operations just can't seem to really recover, so they usually report ex-China numbers to show you the other performance in other markets. Now, in the most recent years, I've also seen IFAST launch a few key things. First, Bond Supermart. Bonds used to be dealt in banks and it's very opaque, but IFAST actually launched Bond Supermart. You can actually check out this over here. Just in case you're interested in retail bonds, wholesale bonds, IFAST actually has this Bond Supermart to help reshape how bonds are being dealt. Then they've also launched DPMS, Discretionary Portfolio Management Services. Now, there are a lot of robo-advisors. I've actually done a previous video, Stash Away. Those are robo-advisors, and IFAST actually launched Discretionary Portfolio Management Services, this portfolio to really, combat this competition moving forward. And the whole idea is just delegate and they'll auto-rebalance, auto-reselect. I actually select this suggestion for quite a few of my private clients also. Now, as you can see, IFAST actually moved in terms of product suite, a lot of changes along the years, which is good. If you want a company to grow, you need to see how you can increase its value proposition, make sure it's a one-stop solution. And one of the latest additions is actually US stock trading. This is a couple of years back. Right now, if you use Fund Supermart as well as you use IFAST, open an account, you can actually trade US shares, Hong Kong shares, Singapore shares. So these are some things, some initiatives, just to give you a broad overview. And the next part, let's cover on why IFAST has actually a scalable business model. Now, in this segment, I'll actually share with you signs on a scalable business model. Let's pull up this by IFAST in the first quarter 2020. What do you realize? Revenue actually shot up by 41.5%, correct? From 2019 to 2020. And expenses actually moved up a little bit, 13.5%. Of course, when you increase business volume, you need to hire people, you need to pay more in terms of your vendors and stuff. But nonetheless, when your revenues can increase by so much and yet your expenses increase by a little bit, that is a clear sign of scalability. In many ways, technology firms always have the advantage because implementing technology is not that expensive. I have this other chart to show you also. What you can realize is IFAST actually does not have a lot of capital expenditure. They only commit about 10 million a year. And in terms of that, that's probably infrastructure costs and stuff. So capital expenditure cost is actually not too high. If you compare that to, for example, an airline company, I've covered before SIA videos. SIA is a typical high capital expenditure business whereby you need to buy aeroplanes. There's a lot of depreciation. But technology firms, fintech firms, actually have this benefit of low capital expenditure requirement. And let's look at the bottom segment. This does not include consideration for successful application of digital bank license. Do you know that IFAST is actually trying to apply for a wholesale bank in Singapore? They're one of the few vendors. I'm not too sure the odds of it. That's a separate issue. But nonetheless, IFAST is trying to apply for a wholesale digital bank to help SMEs with digital banking. They're partnering with some Chinese firms. I have also a previous video to touch on digital banks. But I believe that it's an outside shot. If they can get it, that could be a new revenue growth. And this is actually some article that I've actually seen. IFAST-led consortium. If they get through this project, they could very easily tweak their technology to help SMEs with their banking. Maybe they can even access more of their funds. Move it to advisors to really manage SMEs, cash, because there's a lot of cash sitting in SMEs and they can be optimized in a lot of ways. So IFAST may have that intention also. But in that case, that's my interpretation. Always look to the financial statements as well as reports officially published by IFAST in terms of what they intend to do in terms of their business model. I've also something very interesting to show you over here. This is actually picked up from the Malaysia segment of the business reporting. I actually read that they have actually mentioned that the advisors there have actually leveraged the market situation to help customers buy equities on the cheap. Fantastic for my Malaysian financial advisors. That's what I've been doing also when markets are down in February and March. I've also advocated clients to actually pick up on equities. Consider them because when markets come down, they don't go to zero. If you are diversified, be assured that things can recover with a sufficient period of time. So the advisors there have actually been advocating switches into equities, and they've actually reported in the following segment that they've seen an increase in terms of online transactions from their advisor side itself. So that's fantastic. That shows that technology actually helps a business that's digital do transactions as per normal and acquire new market share. Now in this segment, I'm going to touch on is recurring income. And just in case you haven't smashed on like, inviting you to smash on like so more people can see valuable content like this. And again, inviting you to smash or subscribe, join our community, become more financially savvy. Now when we talk about recurring income is like passive income. It's such a fantastic idea. And if a business can bring in recurring income, that gives investors assurance that there's cash flow going to come in. And this is what I've picked up from their reports. As you can see in the blue one, a growing blue line of recurring income stream. How beautiful is that? That means that the non-recurring rate portion also is growing, but the main bulk of it, the blue one, is something that you can rely on as an investor for dividend income. How is that actually generated? Let's pull up this over here. This is actually the group asset under management. What is AUA? Is asset under management, and IFAST prides itself in collecting assets whereby you and me, we're investors. We put money with IFAST. They actually have a platform fee, which means they actually charge a fee by putting the assets with them, and that is actually where they have actually derived this recurring income stream. Now, as you can see over here, along the years, this has actually grown tremendously. Right now, it's past the 10 billion mark. 10 billion asset under management, and that is actually pretty good. And before we get too rosy on it, while assets collected can bring in recurring income, there's always risk of competition. And this segment, geographical segment profit loss statement, actually shows that while the recurring income is increasing, there's also margin compression, which means competition. There's a lot of brokerages from US coming into Singapore, throwing discounts and stuff. So in that case, when a competitor comes in, the pie is more competitive and sometimes prices need to drop a little bit to stay viable. As you can see over there, Singapore is the biggest segment that contributes about $10 million worth of profits, and Hong Kong and Malaysia are next too. So in terms of what we can see, while the AUM has grown, this profitability has inched up only a little bit, but nonetheless it's still recurring income, it's still profit growing up. So now let's move on to the next segment as to what IFAST wants to be, because just in case you're curious about investing in it, what's its prospects, that segment will actually address it fully. Now, it's been widely reported that the stock brokerage business is a cutthroat business. As of right now, many remisers have actually left the industry simply because commission rates have dropped to such a level that it's not really viable. That's why platforms like UOB Kay Hian, like Phillip Securities have actually seen margins compressed to such a point where it's very difficult to make excessive amounts of returns. In any case, let's pull up UOB Kay Hian's share price. What you observe is share price performance has been flat over the last 10 years or so. It's very difficult to grow the business when commission rates are falling. That's why IFAST, if you look in terms of the reports, they frequently try to mention asset under management. That's how they do their KPI. How much asset are they able to accumulate? Because they don't want to go the route of earning commissions only. They want to go the route of earning fees. Asset under management, fee-based cover method. So in any case, that model looks a little bit like Charles Schwab. My guess is they want to grow towards the Charles Schwab level, whereby if you pull up for you to quickly see over here, Charles Schwab has actually grown their share price tremendously over the last 20 years. They've evolved from stock brokerage to wealth management, and when you collect asset under management, there's a lot of recurring income like what I mentioned in the start of the video, and that brings a lot of other alternative services that you can provide to clients in terms of wealth management. In that case, Charles Schwab now manages 3.3 trillion worth of assets. IFAST is now only at 10 billion. So there can be a lot of potential growth, especially in Southeast Asia region, to bring in asset under management, and that's where my guess is IFAST wants to model towards over a long period of time. Now, I hope I covered a lot of things for IFAST, given you a good perspective. In case if you have questions, leave them in the comment sections. I'll pick up each and every one of them. With that, I'll sign off. Take care and goodbye.